All right, welcome everyone. Thank you for attending. And this is a very timely topic that we're going to discuss. We can talk about in real estate market, will there be a crash, a bubble, or a correction, or whatever? And we can find out as we go through this slide presentation. Welcome once again. My name is Seewing Yi from the Yi Real Estate Network. And my colleague here is Ms. Maureen McCann from Spartan Invest. Welcome, Maureen.
Thank you, my partner in crime. Always good to see you, be with you.
Exactly. Just a brief introduction. We have a vast background. I've been doing this for almost 20 years of real estate consulting. Maureen McCann have done it for more than a decade, and we have helped thousands of real estate investors over the years to buy real estate, buy rental properties. And so, so we are happy to share with you our experience, knowledge, and perspective. And we can talk about, will there be a housing correction, bubble, or crash? So let's find out, all right?
Let's find out.
So each slide, Maureen, you're welcome to, give you a quick thought, because we have a lot of slides to show and we all have limited time. Less than 30 minutes. Hopefully we can go over this entire 16 slideshow, what have you. Right. So, okay, when you talk about today's interest rate, I know is anywhere between 5 and 6%, has been fluctuating, and it's a very challenging market. But even at today's rate of 5 to 6%, from a historical perspective, is still pretty low, which is amazing. If you look at the past decades, the interest rate is a lot higher than today. So, people should not freak out about today's interest rate, what have you. Yeah. So,
and investors were still buying back then, and they're still buying today. The benefit of anyone, let's say in the 2010s, they locked in at 4.1%. They've owned that property now for, let's see, we're in 2022. So 12 years. And in that time, you think they've had some rent escalation over that fixed rate period? They sure have. So it doesn't matter what it is, what the rate is, it is using that rent inflation over time to benefit you.
Yep, absolutely. All right, outstanding. And then, the most important thing we will talk about is that America is short more than 5 million homes, and there's an extreme historical supply shortage of inventory, and builders, especially right now when the interest rate is higher, and the builders, because of a decreasing demand for the short term, they are not, they are pausing construction. So it'll exacerbate the shortage of homes, of new builds and resales as well. So mind-boggling, right?
Yeah, 100%. And to combat sort of what, because I can hear someone saying as they're listening to this, yeah, but it's like a lot more properties are coming onto market, and there's more inventory now than there was 6 months ago. That probably is true, but it is still not enough. And that's what we have to get through to the listeners, is that don't believe the headlines like, oh, we're good, we're back to six months or more of inventory nationwide. That is an untrue statement. And I know you've got the data to support it. Let's go.
I sure do get the data. Hopefully we'll the next video we might show that. But this slide indicates that the new builders are not building any more homes, at least temporarily speaking. So does not looking good on the supply side of new builds coming into the market. And then we need annually we need 1.5 million homes, right? And according to this chart, we're not going to get there. We're not going to get there, not this year, not next year, not the following year, most likely toward the back end of this decade, before we will reach equilibrium. We'll reach 6 months of supply of inventory. So yeah, that's right. We need 1.5 million homes to sell at any given time. And right now, in most markets in the US, we're only selling less than 500,000, less than half of what's needed. In this case, 418,000 as of a few months ago. So we are still way behind in available inventory of homes. And just so you know, every market is different, right? There are 400 real estate markets in the country, but some markets they have right now, because of a higher inventory availability and less people buying because of a slightly higher interest rate, you could make the argument that as of June, which is last month, the month of inventory available is only 2.5 months, and we need 6 months to have a balanced market. So we are way so far away from achieving a balanced market anytime soon overnight. So anyway, any kind of thoughts you have? Just interrupt me, Maureen.
Yeah, no, that's actually critical. I mean, this is what I love. You know, I love where you're getting these. I can see the resources where you're getting this information from. So it's really separating fact from fiction. And you know, there can be a lot of confusion in the market for sure, because it is about those catchy headlines and trying to get your attention, and you know, the clickbait stuff that's out there. You know, fear and anger sell really, you know, much better than facts. But we're crusaders of just getting the facts out there and letting people know, yeah, you might be hearing that inventory is increasing, and that is probably true, but not at a pace that is going to meet the housing demands for at least between, let's call it 2027 and 2028. So is there opportunity to still acquire a property now and capture some capital appreciation or equity growth over that time, in combination with the rent inflation that we're seeing is significant and will continue to be so until we get to a place where the housing market has at least 1.5 million units available for sale. We are not there yet. And so that really just provides the opportunity. So separate fact from fiction, check out the data. It tells the truth. Data never lies.
Exactly. Well put, well said. And the next slide is really thought-provoking. I mean, it's going to dispel a lot of misconceptions out there. Now, some of you out there are maybe hearing there's a recession coming. Some people say the recession is already here. But even if there's a 50% recession coming, it should be a very mild recession because the economy is still doing well. The unemployment rate has been the lowest in the past 40 years. Last week, there's a job report stating there are additional 425,000 jobs additionally coming into the employment marketplace. So it's not all doom and gloom by any means now. For those of you who have this really doom and gloom mindset, look at the past history. Housing stays strong through recessions. I mean, over the past, such a long time, as you can see, the recession, these black lines indicates a recession in those years. And as you can see, housing prices have continued to increase through the recession, with only one exception, which is a 2008 real estate market crash. And so one more thing, another slide indicates that soon after the recession has expired, housing prices keep going up. You see the appreciation, 1980, 1981, a very slight dip in 1991 recession, and then 2001, and then 2020, with the exception of 2008, of course, housing prices has rebounded, has increased in value right after the recession. One more thing that, Maureen, that you and I need to really educate our real estate folks out there, investors and primary home buyers alike. When mortgage rates have spiked in the past, as we're seeing right now, they are typically rebounded within 1 to 2 years. So I know this chart is very analytical, but we're seeing like 5 to 6% interest rate So we have to make some assumptions that in the next few years, the interest rate is going to come down.
Yeah. Yeah, I mean, we definitely just follow this. This is a very in-depth graphic. Even the last graphic that you shared, that was from 1980 to 2020. And you can look at, that's decades of data that shows real estate is recession resistant. It is there. That is fact. That is fact. The other fact that you're trying to emphasize here, and I've seen this many times, is when we are in a recession, then typically interest rates tend to fall and stay low even after the recession is over. And so there's that lingering low interest rate period of time. And because it makes sense, it's like the only tool that the Feds have is to slow down the economy is to increase the Fed fund rate. And then that has a spillover effect into the bond market, which the interest rates are based off of the 10-year Treasury. So they don't have a direct effect, but it's kind of what they try to do to limit or diminish the demand. And so when they want to increase stimulus and increase demand and increase people to put their money back in the economy again, then they lower the rates. And so we have been through so many cycles, Seewing, we know this, right? And so this graph is a very good visual to understand that through recession, no matter how many they've been since 1974 to present day, interest rates are going to go up and down. Housing values tend to rise. And that's the point we really want to emphasize to the investors, to really separate fact from fiction. Look at the data. Data does not lie.
Absolutely true. Absolutely true. And then this is economics 101. Simple economics. Anybody out there that live in America should know this. If demand exceeds supply, housing prices will increase. Right? So this is what happening right now. We are extremely, historically, still very low supply of homes. And although the demand currently has decreased, probably temporarily, but when the interest rate comes back down, foreseeable future, demand going to rise again. And we're going to go back to a very good investment market. Now, this slide is amazing. There's another reason why, Maureen, I cannot see any kind of crash, correction, or bubble, because look at this. The home equity, U.S. home equity is like 27 trillion right now. The value of the housing stock passes 39 trillion with a T. This is absolutely mind-boggling. The people that own homes, 9 out of 10 mortgages have an interest rate below 5%. Most of it, the people that refinanced a year and a half ago, they have a less than 3% interest rate on a 30-year fixed rate mortgage. So sellers, they're locked in. They can sit on their property technically speaking, for the next 30 years. They're not going to sell. Why should they sell a property to upgrade to another property at a higher price and at a much higher interest rate? Their mortgage payment going to double. Why would they want to do that? Right? So sellers are not selling. That'll exacerbate the lack of supply in the marketplace for a while to come. And more than 40% of the homeowners, they do not even have a mortgage. Their houses are free and clear, right? And the people that still have a mortgage, they have massive amount of equity because they have put down 20% down payment a few years ago, and their houses are appreciated so much lately, the past few years. So people are not in a stressful situation, right? When housing market crash, when there's an oversupply of homes, or when people have no equity on their homes, and we're not seeing that at all. So this chart is mind-boggling. So what are your thoughts, Maureen?
Yeah, I was going to say, so the question that you opened up this podcast with was, is there an impending crash or a crisis or a bubble? And this is a great source of data that comes from the Board of Governors, the Federal Reserve System, that really shows that we are not in a housing crisis or in a bubble, because unlike today, when you compare where we have that really great benchmark of like 2008, just an anomaly in the housing market. And that was because of the subprime lending.
Debacle.
The nice word I want to say, just the subprime lending, predatory lending is probably a good word there, because unlike if we were to take this graph and overlay it in 2008, people didn't have equity. They were over their heads, and the only option was to let the property go. And it's because they didn't have any equity. They couldn't sell and walk away with some money, right? They just had to let it go because there was nothing to salvage. It was just, I'm going to walk away from all of this. So when you have 40% of homes that are owned free and clear, that's very unlike 2008. When you have trillions of dollars in home equity, which was unlike 2008, there is a stark contrast between what led up to 2008 and the housing crisis and where we are today. The fundamentals are so strong for housing that this right here, this infographic really clearly illustrates why there is not an impending housing crash, bubble, correction coming.
I totally agree, and almost done. Finally, we look at the future, right? I believe this year, 2022, people just are resetting. People are just, taking a breather to see what's going on. But meanwhile, look at the high demand situation in the foreseeable future. You look at the millennials. 82 million millennials are in the prime buying years. And a lot of them are sitting on the sideline waiting for something to subside, either the economy or the interest rate to come down. And they're going to pull the trigger quicker than you think. So keep that in mind. Right now there's a lot of short-term volatility. We get it, but 82 million millennials it's just amazing. Not only that, look at the Gen X, right? People in about 8 years from now, they could be turning age 30. They're 6. It's a Gen Z, I think. I'm sorry, Gen Z.
Yeah, Gen Z. Mm-hmm.
Gen Z. There are 86 million Gen Z coming toward the end of this decade, 2030. That the beginning age is like age 30. They are beginning to enter the housing market. So I just can't see the supply of homes that can accommodate all this in the next 8 to 10 years, from 2022 to 2030, especially when the people that already own homes, a lot of them are not going to sell for the reason we just stated. And the builders are not supplying enough homes. The new builders, even if they're ramping up construction this year and beyond, they're only selling higher price homes, like homes that are in the $400,000 to $1 million or higher range, because their profit margin is attractive. So a lot of those, affordable home situation, the lower end entry level homes, the builder's not going to build them. So people, the first time home buyers, they can be priced out of the market for new construction. So that's.
And they're going to be tired of living with mom and dad, right? There's going to be at some point that they're tired of living with mom and dad, and they want to get their own place, and they might be renters for a while with other roommates and things like that. But that housing demand, 82 million and 86 million, you think about those will be new home buyers coming onto the market. We're already in a shortage that is expected to go out to 2027, 2028. And then you've got a whole nother wave of millions and millions of new first-time home buyers that are looking for new homes. And that's one of the reasons why Spartan Invest went into new home construction. We're selling to the primary homeowner as well as to investors because we see the need.
Yep. Spartan Invest, you guys are doing amazing job. So you foresee the future with your crystal ball. Good for you guys. And yeah, to a quick recap, really, unless there's a nuclear war, unless the meteor hits the earth and life will end as we know it, unless there's an unemployment of 15% or whatever, economy goes down crashing, there will be no crash, no correction, and no bubble. So I hate to burst some of your bubbles out there. For those of you who are, negative people that always put out these negative comments on YouTube stating, "Oh, there will be a crash. I'm gonna wait on the sideline until the crash happens. Then I'm gonna buy real estate at that time." Well, you might be waiting forever.
They're gonna be waiting at least a decade. That's for sure. It's a long time.
Exactly. Then life will pass you by. Those negative folks that actually a lot of those negative people that post all those negative headlines, they are probably renters, right? They maybe they're jealous of people that bought properties recent past that make a lot of money, so they're jealous, so they want to vent their frustration online to justify their comments.
Yeah. Well, let them do that. While they're doing that, we'll just keep getting the message out to get people to do the right thing for them long term. Let them, it's kind of like I call them sheeple, right? It's like, your herd. You've got your herd mentality, which those people are just going to follow that herd and follow that narrative because that's what they want to believe. And they go all in that direction. And guess what? The ones that are wealth building, they believe something different and they go in the opposite direction, much to the side eye of the sheeple who are going, well, what are they doing? They're wrong. No, that is separates the 1% from the 99%. The 1% go in the opposite direction of the herd.
Yep, the principle of contrarian investing. That's what we're talking about,
Yeah.
So, all right, so that concludes this presentation, and we have given you some data points, some conclusive evidence based on past history. No one can predict the future, but we believe that we have given you a lot of information that will prove our point that there will be no crash, correction, or bubble out there. So
your call to action, you guys, your call to action is to pick up the phone, reach out to Seewing, reach out to myself, find our email, find our phone numbers, and challenge us, throw the questions at us. Like, we'll just give you back the data and then you can decide what is right for you. But at least do something. Pick up the phone, send the email, reach out, get the answers.
Exactly. Well said. Thank you so much. And thanks for attending. Everyone, and Maureen, thank you for providing some great perspective as always. Very, very powerful messaging. All right, thank you so much. Have a nice day.
Bye.
Bye-bye.